Yeah. Okay, it should start about now, and then I should have a chat room underneath. All right, so let me pull up the YouTube chat room so that we can chat with one another, and we will go over some charts together, do some live streaming. About chart. Go. Right, and let's just control plus that so we can read what we type. All right, so we should be ready to go. I'm just setting up for streaming, and being that this is live with Oscar, we'll set it up live with you. All right, so how can we move this around so I can see everything at once? There we go. All right, traders, so I will wait for some of my YouTube fans to make their way over. And then, of course, we'll go over some charts. We'll look at what we've been looking at every day for the last few days in my nightly videos and the live streaming. And we'll see what it means for tomorrow's Fed rate hike. It's going to be a lot of action tomorrow, undoubtedly, kids, so be ready. So I'm just going to, as I mentioned, I'm just going to wait a little bit longer before we get started to have a few of you guys show up that have been looking to come out. So today is Wednesday, right? Well, excuse me. Today is Tuesday. Fed meeting that ends on Wednesday is tomorrow afternoon. The markets have absolutely set themselves up so that you can almost see what comes next. And we'll take a look at those charts and see if we agree that that is the case. Boy, one day we have to get YouTube to make that chat room have noise, Dano. The only way to know if someone types in there is to watch it, you know? And I'm always looking at charts and markets, not chat room. So I don't know when you guys type. I got to keep my eye on that. All right, so we'll wait just another moment and then I will begin. Generally, when I do these live streaming events, everything that I work on is on a screen here, which would actually be my right. Seems like my left, but it's my right. And when I brought up the streaming today, it's only picking up the stuff on the right screen instead of the left screen. So I had to rearrange this whole setup before we started. I don't know why it's only capturing the other screen. I tried to find the capture and change it, whatever. Instead, I just changed my whole system so we can still do this. All right, so let's go start to take a look at some of the charts that I have sitting behind this camera. CryptoCat, good evening, good evening. Thank you very much. And let's see, we'll start off with the, there we go, the Telltale chart. So if you're looking at this chart, we've been showing this to you every day without these daily bars in there, and we reached the point here just a couple of days ago. And I said, well, you know, this gets really tricky when it reaches this red resistance line. And combined with the 200 bar moving average, it just tops this market out. And what happens? We rally the market all the way up until the day before or the day of the Fed meeting, which is tomorrow, today and tomorrow. Fed meeting results come out tomorrow, the decision to raise rates. And what do? Let me make this larger. We put in an outside bar to show that the market has gotten tired and wants to change direction right at that same spot that it fails every time. So that looks like a setup to me. That's, you know, I've been looking at this for days and saying, well, there's a setup. Wall Street's going to take it higher, and as soon as they raise rates, down we go. Well, there is a good technical reason to believe that that is what just happened. So that's what your Dow looks like right now, Dow chart, and that's what this is, of course. This way you can see it. And as you can see, this is a very problematic area when we get to it, especially combined with that 200 ball moving average. Outside day, at the average, at the reversal, they're about to raise rates. We know when they raise rates, the Fed being they, when the Fed raises rates, markets drop. Looks like a setup to me, kids. So that's the first chart I thought I would share with you. Any questions on that one? Interesting, right? How Wall Street takes it right up to a pinnacle, right before some news is going to come out that should take it back down. So what do you think they're doing? Loading up on cheap puts and selling out expensive calls, right? Why wouldn't you? So that's kind of what's going on right now. And we'll find this out tomorrow for sure. Now, can the market go higher? Absolutely, positively. We know how this works, right? It could absolutely go higher. So let's look at that chart again. Oh, I'm sorry, that was this one. Can it go higher? Sure. Can it go up and take out the stops above the red line? Sure. What is it supposed to do? As an analyst who looks for repetitive patterns, what should we expect right here? I'll bet you everyone listening can answer this question. What should we expect as analysts who look for repetitive patterns now that we've hit the red line and the 200 ball moving average? Anyone who feels like answering that question, show me what you got. That's not what I wanted to put up. It was this. So I would say down, right? The next thing that should happen is down. Until the chart tells us something different, a repetitive pattern tends to repeat. Till it stops repeating, it is a repetitive pattern, right? When this stops repeating, then we look for something new. So as far as we can see, we've rallied it up just enough to knock it back down once they raise rates tomorrow. Now, can it go up was what we were discussing. Sure. If it goes up, it's something new, and it tells us that something new is now taking place. So let's put a fictitious bar in there. Can it do this? Absolutely. And that would give us something completely new and different to discuss and to trade. But they are raising rates, and they are raising them tomorrow. And that tells me that we probably will not get that, and we'll most likely get a red bar to the downside instead. So this is what I would expect. I will not be trading tomorrow either way. Today, we absolutely killed it. We sold the S&P and the Nasdaq right where OMNI told us to sell it. The market dumped. We took our profits, and now we are sidestepped. But that worked out really well. This could be tomorrow's fate, and probably should be, but we'll take it one day at a time. All right. What else was... Well, we were looking at another chart together yesterday, kids, right? I'm sure we were. Yes. Remember this bond chart? And I basically said you are looking at the kiss of death. This red line combined with the average is the absolute kiss of death in bonds. Well, what did they do? They rallied bonds right up to the Fed meeting. Where did it get to? Right to the kiss of death spot. What happens at the kiss of death spot? Well, you can see what happens. Boom, down you go. Gets back to the kiss of death, hits the average as well, down you go. Just about, down you go. Fed meeting, looks pretty obvious, right? I think it looks obvious anyway. So that's what probably will happen in 30-year bonds and your stock market. And I think there might have been one more chart that we kind of messed around with. It was this one. Let's look. 7. At the same time, if you recall, we were calling this chart masterpiece, and we were looking at how often it fails at this average. And now that we are at the average and they're about to raise rates tomorrow and we are at the top of a channel, I think that channel will morph into a big old bear flag. That's what it will be in the end. Now, if it goes up, well, hey, we'll take it. That's something new. We are day traders. We'll put our stops in and we'll start trading from the long side. But that's not exactly what we're getting right now. We've rallied in a bear, we're in a bear market that had a rally leg in it. We're at the could-be top of that rally leg according to the movement that takes place around this average and according to the top of this channel, which could be a bear flag. So you have to read this bearish for now, and if it proves to be bullish, then we will start trading it from that aspect. For now, I think it proves to be bearish. So, crypto says, well, okay, Groupal says, Oscar, can you explain why this talk of pivot has created this bullishness over the past week? The talk of pivot is an excuse. If you ask me, that's an excuse. Reality. And of course, typos like crazy. R-E-A-L. I can't even see what I typed. It's too far to my right. Now I can see it. Reality is that, if you ask me, is reality. Reality is Wall Street ran this up into the Fed decision day. If you ask me, the pivot talk, give it a name, call it anything you want. All right, so we'll call it pivot talk, right? But it's not really that. This happens almost every time. There's an opportunity to run the markets up before a bearish report or send the markets down before a bullish report. Then you go back up. So if the street knows how to read what's going on, they feel raising rates will make the market go lower, which is why they've rallied the markets up into Fed decision day. That's the usual MO, so that's what I think it is. Doesn't mean it has to happen tomorrow, but it is very usual. Now, let's just take a quick gander at some stocks, just to see how they are falling in line with everything else. So we'll start with something like Apple. Lo and behold, what does it do? It hits the average, and where does it go? Hasta la vista, baby. So that's what we're dealing with now. If you remember, I had this all stretched out across here. And in my last few presentations, I said, even though I can't fill in this rectangle, we'll just pull all of this across and pretend it's filled in. Big resistance area. If it can't get above that, we know what's going to happen. So this is what we've been discussing for the last few days. Well, look what it did. The one green bar gets above it for a day, and then right back down, taps the 200 bar moving average, gets back below the resistance band, and there's a report coming out tomorrow that should be bearish. It all makes sense to me. So that's Apple. Let's just do Netflix. I haven't looked at that in a while. It's been such a sad stock. Let's go look at it. Okay. That looks like it wants to do a nosedive as well, but I don't really care. I'm not going to even bother with it. See what Tesla looks like. All right, so what did Tesla do? Remember I told you, unless it gets out of, if you guys have been following this, each one of these charts is set up because each day we do streaming and we put some techniques on the charts, and then we want to see if they work out because in the future, because we're streaming together almost every day. So these are things that while we've been discussing these particular stocks, commodities, whatever, I've added to the charts during our conversations. So in the last, few days or a week or so since we've been doing these streams, we've added the knock knock technique to Tesla, right? Knock, knock, knock. It just keeps knocking here. Eventually, I promise, when you knock on the door enough times, it will open in this industry. And then we called this a bear flag. And what I was saying, if you recall, was that for me, we're just going to gyrate inside of the bear flag, and there's not much you can do but play both ends of the flag until it breaks out either way. Well, it hit the top of the flag today, and so far is all the way at the lows. So that tells you that it ran into the same old resistance it always runs into. And once again, if the report is bearish for the stock market tomorrow and raising rates, obviously Tesla has a lot of debt, it will be slightly detrimental to companies like Tesla and other high-tech, high-flying companies like Google, for instance. Boy, oh boy, look at that bloodbath. Ever since we fell out of this flag, look at that bloodbath. Big old flag makes a big old projection. This is Google. And that is looking uglier by the minute, if you ask me. It's starting to now create a channel downward. There's a channel. Not perfect yet. If I wanted to mess with it, I could figure out exactly where it is, but there's something happening here. And of course, you can throw it out there just to capture everything. And there's something happening in here that seems to give it a lot of trouble, except for the little breakout period. So, yeah, not looking so good there in Google, that's for sure. And I'll bet Facebook is a bigger mess. This is Meta, or what used to be Facebook. Kramer's great call. Not so good, huh, Kramer? So, how bad is that? Wow, that's just terrible. So, you can't even defend it at support because it's gone. There is no support. It's been busted apart. Wow. Look at that mapping that we had for this. It worked perfectly. Look where it dropped from. That worked perfectly, kids. That was the mapping that we did together on Facebook a week or so ago during our live streaming. How about that, huh? We want to look at Amazon. Sure, we can look at Amazon. Let's go take a look. No, Tesla just took on a huge amount of debt because they bought Twitter. They took on $54 billion worth of debt or something around there. No, wait. Let's see. Let me think about it. I think if I remember right, he put up like 26 billion of his own dollars. The rest he borrowed. If I remember right, in Tesla. That's to you, Dano. And so Quicksilver talks about people keep overlaying 2008-9 SPY chart to current. It looks very similar. I agree, Quicksilver, but there's a big difference. And we will, of course, get to your Amazon chart. I agree. So you see what I'm typing to you? I agree, but there's a huge difference between 2008-9 overlay S&P chart with today's S&P chart. Real estate is not in the same place it was in 2008-9. It is on very firm footing. It is not wrapped up in derivatives. It is solid. There's a huge, huge difference. So I don't think we're in the same shape today we were in. I don't know how to make you realize that this is just something that is supposed to be happening. But I literally mapped it out in a video for everybody on January 4th. I told everyone, according to what happens in the world, this is what happens next. When they raise rates, this has to happen. Here's the reasoning. Here's where we should go. And now that it's happening, everyone's throwing every excuse in the world at it. It's not anything more than what the Fed told us they were going to do. They telegraphed it over and over and over again for months on end. Then they got closer to raising rates and talked about it even more so. Then I started to do videos saying they're about to raise rates. The market has to come down. Now the market is coming down. What part of this was not in the plan? I don't understand why everyone throws everything but the kitchen sink at what's going on right now and blames stuff. Or says the Fed's behind the eight ball or whatever. How could the Fed be behind the eight ball? Go to Europe, go to Australia, go to China, go anywhere. Go to Mexico. See if our Fed's behind the eight ball compared to theirs. You know what I mean? People have this so wrong. Our dollar is strong. Our stock market is adjusting due to high interest rates. We're on solid footing. Real estate is good. You know, you drop the price of crude, the stock market explodes. Yeah, something big is happening in real estate, Chris. You know, let me explain to you what's going on. Chris Langs says, I sell mortgages for a living. Something big is happening in real estate. It's called sticker shock. All right, so what happens when the last 10 years you hit it, you can buy a house or building at 2, 3, maximum 4% interest rate. And now you're looking at 6 to 9. You get sticker shock. I can't afford that. I'm not buying that. No way. But you know what happens next? They come out and buy it anyway. Chris, how old are you? If you don't mind asking, if you don't mind telling us how old you are. The Nile is not a river in Africa, huh, TRC? Chris Langs, how old are you? Okay, so if you're 41, you should absolutely remember everything that we've seen in real estate, and that's this. When are rates at 0 to 1 or 2%? Ever. Never. 2008, we had a crisis. They knocked the rates down from 2008 to 22. People got used to seeing that. All of our history, rates were 6, 7, 8%, somewhere around there. Always, always, always. We just need to get used to the sticker shock, and you will see, you will start selling more houses again in no time at all. This is not a real estate bubble that is bursting. It's not tied into the stock market to the point that both of them went so high we can't handle it anymore. It is an economy that was building steam too quickly, and the Fed had to slow it down a little. It doesn't mean your real estate is going to fall apart. There is sticker shock right now. Look at cars. Sticker shock on cars, that went crazy too, but now people are going, all right, what the hell? If it's going to be 8%, it's going to be 8%, and they're buying them anyway. So everyone always bought real estate when it was 7 and 8%. You know that, right? They're just used to 2%. The sticker shock will go away, and your real estate business will pick up again. Now, there is one thing that has happened. We've reached a point where if you are going to buy a house to rent it out, you are now at a spot where you got to put down almost 50% of the value of that house to get a mortgage that will cover the rent. Otherwise, you're behind each month. When you get the rent in, it doesn't cover the mortgage. People can't afford that much money right now. So real estate has to cool off a little because we're getting to a spot where unless you buy to move in and keep it for yourself, you have to put down a huge amount on an investment property, which used to be 30, 50, 100,000, is now 200,000 to get the same property and still have a mortgage that would cover the income on the rent. or the rent would cover the income. The rent income would cover the mortgage. So that's where we reached the pinnacle. I know this for a fact. Right on my block, a neighbor wanted to sell me his house, offered it to me at a better price than another person could buy it at. And I said, okay, I'll take it. And then I looked and went, well, unless I put $247,000 down on a $500,000 house, the mortgage will not cover the rent, or the rent will not cover the mortgage, I should say. And I went, wait a minute, you're telling me I got to put $250,000 down on a $500,000 house just to rent it out and have the rent cover the mortgage? That's not worth the investment. So I passed on it. The first house I think I've passed on in my whole life that came to me as a decent deal. I don't think I've ever passed one up. We've probably done 11, 12 houses. I've never passed one up when I got a decent deal. This one, I had to walk away from. Because looking at it, I went, well, it doesn't make sense to put out that kind of money and then still possibly have to put money out of my pocket each month to make the rent. How does that make sense? It doesn't. The numbers no longer add up. So unless you were buying a property to move into yourself, we reached the pinnacle. So yes, things had to cool off a little bit. Anyway, that's the way I see it. Anything else? Anybody want to discuss anything else on this lovely Tuesday afternoon? Where's the market, by the way? Nowhere. Well then, I think I've had enough for this afternoon myself. Of course, I've worked on analysis all weekend and all day yesterday and all night last night and today. And Sun King says, Oscar, AMD. How about AMD? I can do that. Oh, I'm sorry. Let me mute that. We're listening to me twice. Sorry, kids. When I get to the mute, I'll mute it. All right, there we go. So that's muted. Let's go look at AMD. We'll see what we got going on there. AMD. That was number 4 we were working on, right? AMD's pretty old stocks, Sun King. We've been looking at that for years and years and years, and boy, does that look nasty on a weekly. Oh, God. That looks terrible on a weekly. And just about as terrible on a daily. AMD, if you ask me, is a short, not a long, Sun King, if that's what you want to know. How do we add text on this one? Oh, yeah, it's like this. AMD daily. Look, it's just as prevalent here as it is on the weekly. Check this out. This is absolutely asking for trouble. Right, you got a problem there. And check this out. Not only do you have a problem on the daily, but you got a bigger problem on the weekly. You got the same thing on the weekly of AMD. Look, couldn't get much flaggier than that on the weekly AMD. And the flag's building below the 200 ball moving average. That's not happy either. So that would be your AMD chart. And we can label that as well. That does not look good, kids. All right, so there was another request I seen in the chat somewhere. That was, do I do these videos at the same time each day, Sandy? When I get the urge to do them, that's when they come out. It's almost every day, but I mean, you know, I live this 24 hours a day. I can't keep myself on a set schedule. It's not possible. Hold on a second. We wanted to look at Amazon, right? Someone asked for Amazon first. Let's go do that. And it looks like the work we've been doing on Amazon is exactly right as well. Even if we take this and extend it down here now, that doesn't change much. It's still falling out of it. Well, that's not what we want. We want this whole thing to move up. Does that work? Yes, it does. We need to go like this. And we need to go like this. Boom. So even if we try to capture those lows, it still looks terrible. Amazon is in a funk on the way down. What about ANET and natural gas? All right, let's go take a look. We'll do ANET first and then natural. ANET. I don't know if I'll even get ANET. I'll try. All right, so we got ANET. Well, so what does ANET have to do with either natural gas or crude oil? It's obviously an energy stock, right? ANET has to be an energy stock. So what is ANET, if you don't mind? Instead of me looking it up. Oh, it's Arista. So it's an oil stock, right? Or it's got something to do with oil. If not, I'm in shock because only that stuff has been going up lately. So it's Arista, which I actually know the company, but I haven't looked at their chart in quite some time. Yeah, there you go, challenging some resistance above the 200. Big spike today. You've had some big spikes, and it's continuing in that direction. You gotta like it, right? What's wrong with this? I'd say you gotta like it. Oh, they're doing cloud, huh? I'm surprised you're seeing a cloud network company going up so high in a stock price. Dear Lord. Looks like a, it literally looks like a an energy stock at the moment. Like all of those look the same. They're just going up. How does natural gas look? Well, that's been terrible. We could go look at natural. Natural gas has been dropping like mad. Major support broken, being the black trend line. Right? It's major support broken below the 200 ball moving average. Bear flag built. You got lower to go still. Look, bear flag is right before our eyes. And in a market this volatile, dropping this fast, the bear flag is generally correct. So you've got the bear flag right there, inside the channel, under support, below the 200. I think natural gas has lower to go. That would be my professional opinion without running an OMNI on it, of course. The Dow, is it still leading? Grupal, did you see? Check. Yeah, it is. I agree. And check this out. You're welcome, Gary. I do agree. And look at this. This is what we're going to run against in the Dow right now. Which chart was Dow? 20? No, 7. No. The Dow was one of these, I promise. Yes. Here's your Dow chart. If you ask me, it's speaking pretty loudly right here. See what I mean? It's speaking pretty loudly right here. So I think the Dow is leading, and yes, it's going to move us lower. Of course, you know, the way the world reacts when a report comes out tomorrow, when they raise rates, the world could come in and buy the crap out of it. I don't know. But everything we just looked at together doesn't indicate that at all. All right. So anybody else want to see any other crazy charts here? Anyone have anything obscure you want to look at? Just if you're going to give me an obscure stock or commodity, make sure it's got a lot of movement. Because if it moves this much, I won't even analyze it. It's not worth it. My pleasure. Thank you for watching the streaming, Silver. I appreciate you. FSLR. I seen you do that earlier, Dano. My apologies for not grabbing it. FSLR. Boy, it looks better than it did 2 days ago when we looked at it. What a crazy stock. All right, what do we think about this guy? Let's go look at him on the weekly, because the daily already, I mean, there's really no need to discuss the daily, right? Oh, dear Lord. Nor the weekly. There's no need for discussion on this chart, Dano. Just stay long. There's nothing else you need to do. Yeah, I don't think there's anything else you need to do but enjoy what's going on in that chart. All right, let's just take a real look at it. Let's take a real look at this guy. Now that's a very, very bullish stock. My goodness. Nice find, Dano. SCCO. Isn't that a ETF? No, it's not. SCCO. How come? That's a really old one too, isn't it? That's like a 90s stock. If I remember right, SCCO. Let me take a look, NCAR. It's like a 90s stock, if I remember. It's one of the biggest flats I've ever seen. It's one of the longest flats I've ever seen. You know how flat this thing is and for how long? Both. It's one of the longest flats I've ever seen. It just stays there. I actually like that. All right, so you know what? I wouldn't like SCCO unless you can get over that. You get over that, I would like SCCO. Because I kind of like it already, but of course I'd have to wait. Interesting. Once you come out of a long flat, you kind of go in a direction almost as long as you went this way, almost as long as you went sideways. So when this thing finally goes, the market has the potential literally to go almost up or down about as long as that. So we'll see. We got to let that tell us what it's going to do. I couldn't possibly tell you. I couldn't tell it. I'll look at AT&T. I don't know about GSK or ASON, but I'll look at AT&T for you. Let's go look. AT&T. Why is it not coming up? It can't be and, can it? There can't be an ampersand in there, can there? Nah, I didn't think so. I don't think there's an ampersand in there, so I'm not sure how to get it. Should just be ATT, but that wasn't showing up. Yeah, I didn't think so. Why is ATTO coming up? So, why are we not getting AT&T? Oh, it's just T. Thank you. Thank you. Thank you. All right, so let's just do that. How go the stock market? How goes AT&T? Is there really a difference between that chart and what the Dow just did? I mean, isn't that about the same? I can. All right, I can make it look like the Dow chart. I can draw. Hey, wait. Look. Let me see what we could do here. Started with a red circle, and then we had the teal circle on the outside. All right. And we can have another one over here. Big circle on the outside, a little red circle on the inside. It looks a lot like the Dow chart to me, kids. Oh, that's not right. It needs to be red. Must stay consistent. That's bad. So, and of course, this is your 200 ball moving average. Here and here. It held here. It held here. Now it's below. And this is on 18, right? I say it's going to have the same fate that the Dow will have tomorrow. WDOFF. Well, it's got to be like a penny stock, right? Why would you ask me to look at that? I mean, I'll look. I'll look. WDOFF. I don't even know if it'll come up. Yeah, that thing moves $1 a day. Sorry, I really I can't analyze it. It wouldn't matter. It wouldn't matter if I analyzed this for you. It doesn't do anything for me. It's nothing I would apply my mind to. Sorry. Sorry to say that to you. Too little movement for me to look at. So for the amount of work it takes to come up with a good trade, in a stock that's going to move $1 a day, I mean, it's like tying me to a whipping post. Can I look at Intel? Sure. Let's go look at Intel. Intel first. I don't think I topped the symbol right. I think I messed that up. What else are we going to look at? Netflix, Intel. All right, we'll start there. Why is Intel not coming up? Unless I'm typing the wrong symbol, where is Intel? What symbol do you have for Intel, please? Lying eyes, $1 a day might be 15%, but I'm a day trader. You know what I mean? I have no need to be in it. INTC, thank you. So I have all these charts, but they're all on my left screen, which I can't show you guys today. So I'm stuck trying to figure out all this stuff. So we've been working on it, obviously, right, together, because you can see all these trend lines and stuff I've got on from us working on it. And we're back inside of that channel, which isn't going to help anybody if you're long that stock. No, I don't like it back inside the channel, kids. At least the channel's working its way up, not down, but you're in a bigger purple downward channel working your way up in a smaller, like a bull rally in a bear market type. But I'm no fan of Intel right here. I'd expect downside, not upside. All right, what else can we what else is rather large? We never did pull up the Amazon chart, huh? Did we ever pull up Amazon, kids? I know we discussed it, but I don't know if I pulled it up. Yes, we did. We've already looked at that. Yeah, that sure looks as terrible today as it did a few days ago. That just looks terrible. And this would have been a failed cup and handle type operation for a lot of people. I'm sure that's what they would have called it. See if I can find the proper tool to illustrate that. Could be this. No, that's my little umbrella. That's my little Pac-Man tool. There's my other. There we go. This was some kind of, I think they were probably looking at this as a cup to a cup and handle. But the handle turns out to be down here. It couldn't possibly be a cup and handle. And that's just failing miserably. Anything that just jumps out at us? Well, you drop through that channel. Not really. Ugly. I don't like Microsoft here at all. Yeah, I think we looked at Netflix, didn't we? Yeah, we did. Had that little hook back down again. So you are above the 200. You got that little hook back down, which I dislike completely. I don't hate it. I don't love it. I don't really have an opinion of it. Just looking at it for the raw chart that it is. I don't dislike it. I don't like it either. I don't really have an opinion of it. I mean, it fell out of this, right? So we know it's not in that anymore. And it's actually building a little channel the other way. Little, but it's building. Let's just make that look more realistic. All right, so we put this one here. Hold on a moment. And then you guys stop messing around with me. So you got something going on that way now. I have no opinion. I don't really. Nothing either way on Netflix. Could that be a bull flag? Sure, it could be. Absolutely, that could be Dano. Did I do crude? Well, we might as well look at crude. You gotta always look at crude. I've got crude charts set up, but they're all on the wrong screen, so I'll just create one here. Well, there you have it. Pinnacle spot again, as always. Everything's come to a pinnacle, and tomorrow rates get raised. Isn't that interesting? At the 200 ball moving average, which has been a shelf all the way across. It's held all the way here, and it's kept it below all the way across here, with the exception of a 2-day stint. So we are below the average and at that spot. trading room we want? How about Dr. Copper? Poor Copper. Okay. What about copper? Well, it's about the same size bear flag as Google had. What's the size of that sucker? Nothing. It'll just stay inside of here for a while. 380 to 320. I don't expect a lot of movement out of copper. Copper could have some, after the election, you never know. Maybe it'll give copper a boost, but I don't see how the election would create more building or anything of that nature. And copper is basically Dr. Copper. It lets you know when more building is about to take place. All right, at least we got some of these charts labeled up for the next stream. At least it's easier to spot them when I pull them up for us. What is copper telling me? Copper's telling me that we're not ready for some big upsurge in the economy nor in building in the next 6 months. Oil. Exxon has posted the best earnings it's ever had in its entire history, I think, if I remember right. Big oil, BP, good earnings. All of that whole oil sector, Biden's their best friend. Good for you, Dano. Putting off the rewiring. All right, so where are we, by the way? Market's done nothing all afternoon, huh? It's 4 o'clock. I didn't even realize we're at 4 o'clock yet. Excuse me just one moment. So it is 1 minute till the stock close. So tomorrow I'll try to stream before the Fed meeting. This way we could be hanging out together for the Fed meeting. Expect massive volatility, and then unless Powell has anything more to say than data-driven decisions are all we're going to make. If he hints towards not raising 75 basis points at the next meeting, it'd be the biggest rally you've ever seen. If he says nothing, raises 75 basis points, and says it's data-driven, we going down, kids. And that's the likelihood, is that we're going down. All right, markets are closed. Here we are. Hooray, hooray, hooray. Another fine day out there in the marketplace. Thank you all for tuning in to the live streaming. I will live stream again tomorrow during the Fed meeting. Make sure, if you'd like to spend more time with me, what I'm doing right now, this live streaming, I'm always here in this live trading room, the one that you're looking at right now. So you can always find me there and hang out with me, where I do the same thing with live streaming, but always. It's just where I live. So if you want, join me at livewithoscar.com and we'll continue this on. If not, I will see you tomorrow. Thank you for tuning in. And tonight, of course, a YouTube video will be released to see what I think about tomorrow. Thank you, everybody, and I will see you either at livewithoscar.com, at my next stream, in tonight's video, or I didn't mention this to you yet, did I? We've got a Metastock live performance this Monday at 3 p.m.